you're back in the loop. Now, every so often, investors do wonder about the health of the property sector. Sometimes it comes into question, and now more so than ever as Trump's policies start to take shape. Everyone's pretty much concerned about the prospects of the BPO sector, and as a result, the property sector. Colliers, for one, sees softer residential property prices on the horizon. But what about offices? Joining us is Richard Raymundo, Deputy Managing Director of Colliers. Hello, Richard. Thank you for joining us. Yes. So you did say in your quarterly report that residential property prices, okay, these are like condos most like, in business districts may begin tapering off within the next 4 years if rental rates continue to decline while more housing developments are built. You're seeing, actually, it says here, a 2 to 6% decline in rates in the next 12 months.
Yes.
And bigger even in Taguig and Makati. That's 5 to 7% down over the next year. Oh, no.
Okay, let's put it in context.
Yes, please. I was going to ask you.
If you look at because what the Collier survey that we had, it's a bit of a mixed bag. So let's do it in a nutshell. Okay.
All right.
We're bullish on office. So the BPO segment is doing very well. Vacancy rates are very low. You saw the numbers with Ayala Land recently.
Yeah.
That went very well. The retail is still doing very well. Again, vacancy rates are very low. If you go to the residential, that's a bit interesting because the prices are still up. If you go around the market right now,
it's still expensive.
It's still expensive. Yeah. There are residential condominiums right now at 300,000 pesos per square. And that's really expensive.
It is.
Yes. But the ones that we saw, which are actually softening, are on the secondary market. The ones which are built already, the ones which were completed and going back to the market, we saw that it's starting to soften.
So for example, I bought a condo in pre-selling and I'm trying to sell it off, I would have a hard time.
Well, it depends.
Yeah.
If you want to lease it out, you're going to have a certain yield right now. It's not as high as, let's say, 15 years ago because, interest rates are lower now and everything. The supply is there. You have 90,000 units of residential condos in the market right now. In 2020, there's going to be 140,000. That's a lot. Of supply that's coming in.
Now, the big worry also, this downtrend in rental rates, how soon do we see this, if at all, weighing on selling
We're
price?
already seeing that. We're already seeing rents going down, but the interesting thing is prices are still holding up.
Okay.
Because, interest rates are still low, there's still that holding power, so that's still being kept at bay. The fact that on pre-selling that the developers can still raise the prices, that shows you that there is still support on pricing.
So you don't believe there's a bubble coming up, at least for the residential sector?
I think it might be locational, or certain years which will have a lot of supply, but then it tapers off.
Okay.
As long as the industry is there to take it up, I guess we should be okay. Okay,
let's talk about the somewhat pink elephant in the room. I'm talking about BPO. So the
yes.
spotlight is now on commercial spaces, offices, retail spaces. This will probably offset that weakening demand in residentials, whether or not it's actually really tangibly there. Now, there's definitely a higher demand for offices. And when we talk offices, how much of this is actually not for BPO and how much of this is for BPO?
Okay. Our estimate, Colliers estimates that about 70% of the demand, the take-up, is BPO, KPO. KPO is the higher level type. And then the 30% is the traditional, for the MNCs and all of that. So that's a breakdown.
Okay. So is that doing well? I mean, did you notice, being in a consultancy firm, that with the Trump presidency coming online, are there less inquiries for BPO spaces? Is that actually happening?
Everyone was scared about this one. What's interesting is if you look around the market, you have 1 to 2% of vacancy rate. That's ridiculously low.
Yeah,
How can you operate in a market with a 1 to 2%? So that actually stymies expansion. That stymies, if you want to get bigger space now, it's very difficult. You go around the market, it's very difficult to find space. We had around 600,000 square meters of space taken up last year. That's a lot.
Well, I think this is because there is actually no space in Metro Manila. Like, you can't even get your car into like a lane properly. So that said, you also mentioned in your briefing that there's sort of be this new developments around business sectors, but like, we call it gillage before. Sa gilid ng Makati, gilid ng Salcedo.
And then that's what's happening right now, both for residential and office. You now see the Bay Area. That is getting a lot of the BPO space. You now see the fringe of Makati. You now see the fringe of Ortigas. You now see even Quezon City. Ayala Land's development there, that huge development near the Triangle area, that is huge. So you're now seeing that getting pushed into peripheries because you mentioned land prices is very expensive in Fort Bonifacio and Makati. There's very little development space available, so they're now forced to go into different areas.
Okay. Well, to bump up growth, a lot of these real estate companies are also pushing outward. What with President Duterte's rural development push? You look very happy with that. How has this affected your figures, your statistics or data?
We're very bullish on infrastructure. As you've noticed, infrastructure is starting to push development right now. It's unlocking values. So if you look at what's happened in the region, in Asia, that's how values were unlocked, is infrastructure. You're now going to see satellite communities, and you're already seeing that in Metro Manila. You're now going to see developments attached to nodes of train stations and depots, and you're now going to see developments in the provinces like Cebu, and that is good news.
All right. I hope it's still good news next quarter. We hopefully have you back here to see how the updates will come, and hopefully it's all good news for the sector moving forward. Thank you very much, Richard. Right, still to come, Apple is in talks with a new manufacturer for its touchscreen all the way in China. We'll have that story after the short break. Thank you.